Okay, let us continue from what we left off from the first part of the lecture. So here we have the income of the net income of 132, yeah, 132. Out of this 132, $44 is paid as dividend. Therefore, the dividend payout ratio is 44 divided by 132, which is equal to 33%, or in this book 33%, or one third. This is so it's equivalent to one third. This is the dividend payout ratio. The formula for dividend payout ratio is cash dividend divided by net income. Okay, so if the company pays $44 out of 132 profit, it means that the rest would be retained. So if you see here, 132, 100, 100, 132, 132 minus 44 is equal to 88. So this 88 would be an addition to retained earnings here. So the $88 would be added up to the accumulated retained earnings from the previous year. Pendapatan tertahan yang terkumpul sebelum-sebelum ni, ya, daripada tahun-tahun sebelum ini. Okay, so this is how you come up with all these figures in table 4.1. Oh, I forgot one thing. During the first part of our lecture, I mentioned about items that change with the increase in sales. As I mentioned, some of the asset sides of the balance sheet, some of the items will increase. On the liability side of the balance sheet, some of the items will increase, some will remain constant. On the liability side, notes payable will remain constant, but accounts payable will increase. There's another part of the balance sheet which I did not explain in the first part of the lecture, in which the equity side. So equity usually consists of, these are the equity items, yeah. Equity consists of common stock. Equity is common stock. Common stock, and then sometimes we have premium. Okay, or in this example on page 101, equity is common stock plus paid in surplus. They put it all together, paid in surplus. This is the part. Okay, so let us take a look at the equity side of the balance sheet. So we have common stock and paid in surplus, and then we have retained earnings. So this is the equity side. So for the purpose of constructing a pro forma balance sheet, we usually assume that common stock and paid in surplus will remain constant, so it does not change. However, retained earnings usually change. So for retained earnings, the increase in retained earnings, the calculation part is a bit more complex. If I can cover in this lecture, I will try to do my very best. Otherwise, we can have a further discussion during a classroom discussion, yeah, because there are limitations on the things that we can discuss in this video. Okay, let's take a look at the example here. Let us begin with just now we have discussed the income statement, the current income statement for Rosengarten Corporation. Now let's take a look at the current balance sheet, table 4.3 of the textbook. So this is a current balance sheet of Rosengarten. So this is also a simplified balance sheet, yeah, and we compare. Table 4.3 is the current balance sheet, and table 0.4 is the Proforma balance sheet of Rosengarten. So now our objective is to understand how these figures change. Yeah, let's say for example cash. Cash for during the current year, cash is $160. However, the cash in the proforma balance sheet is 200. So how does this change come about? Okay, from the previous page, on page 98, stated here that Rosengarten has projected a 25% increase in sales. So the current sales is 1,000. So next year sales is equal to 1,000 multiplied by 1.25. Remember, we expect a 25% increase in sales. So 1,000 multiplied by 1.25 is equal to 1,250. So we get sales 1,250. Okay, so sales of 1,250. So as I mentioned earlier, some of the balance sheet items will increase accordingly. I mean, for example here we have 4 items in the balance sheet: cash, account receivable, and inventory. So each item in the balance sheet will increase by the same percentage, will increase by 25%. So for example, cash is originally is 160 here, 160. So it will also increase by 25%. So 160 multiplied by 1.25. So we have a new level of cash of 2,000. So that's how we get this figure of 200. Sorry, a figure of 200. See. Similarly, the same goes to account receivable. The current account receivable is 440, but account receivable will also increase by 25%. So 440 multiplied by 25%. So the new account receivable is 550. Okay, you can also calculate the increase in inventory. And also inventory will also increase by 25% from 600 to 750. From 600 here to 750. Okay. What about plant and equipment? Okay. In this example, net plant and equipment will also increase by 25%. From 1,800 to 1,800 to 2,250. 1,800 increased by 25%. so it become 2250. Okay, however, okay, this is if you remember what I mentioned just now, uh, for the purpose of examination or test, net plant and equipment does not automatically increase by the same percentage. Remember I told you just now, net plant and equipment will only increase if the assumption that the firm is operating at full capacity. In this case, the underlying assumption ataupun andaian yang tidak dinyatakan ialah net plant and equipment increase 1,100 to 2,250 under the assumption that currently the plant and equipment, currently the firm is operating at full capacity. Okay, why is it so? Let's say, let me give you an example. Let me give an example. Let's say, for example, Proton factory. Proton, the company that produces cars. Let's say, for example, I want to explain to you the concept of, now I'm trying to explain to you the concept of what is meant by operating at full capacity. Operating at full capacity and operating at below capacity. Okay. Okay, when let's say for example, we take an example of a factory that produces cars. Proton lah, let's say for example Proton. Okay, let's say Proton has a factory that operating at 3 shift, 3 shift, and each shift can produce, let's say for example 500 cars. So altogether in a 3 shift, 24 hours, 8 hours per shift, Proton can produce, I said just now 500 cars, right? So 500 multiplied by 3 is 1,500. Okay, if Proton is operating below capacity, it means that currently Proton is only operating probably 1 or 2 shift only, 2 atau satu shift atau 2 shift sahaja. It means that, let's say if Proton wants to produce additional cars, there's no need for Proton to build new plants, to buy new machines, because all Proton needs to do is just add additional shift and use the existing facilities to produce more cars. That is why when the firm is operating at below capacity, there is no need for the plant and equipment. Plant and equipment means harta-harta tetap lah, kilang or machineries and so on. There's no need for the company to build new plants, to buy new machineries and so on. They just use the existing facilities. However, if the plant is now operating at full capacity, it means that if Proton wants to add additional production, they have to build new plants, they have to build new machines, they have to buy new machines and so on. That's why when the firm is operating at full capacity, any increase in sales will be translated increase in productions increase in products to be produced, and therefore the company has to produce, have to build new plants and to buy new machines and so on. Okay, if my explanation sounds so complicated, just keep this in mind. If the firm is operating at below capacity, any increase in sales will not affect net plant and equipment. If the firm is operating at full capacity, any increase in sales will automatically also increase the asset, net fixed assets. Okay. A discussion on additional financing or external financing needed is a bit more complex, it's a bit more complicated. But let me try to finish this example. Yeah. Okay. Assuming that, okay, now we have explained to you how these figures from the balance sheet items change to these figures. Yeah, these figures by increasing each item by 25%. Okay, let's take a look at the liabilities and owners equity side. Okay, liability side pula here. This is the liability side. The liability side here, as I mentioned just now, not all items on the liability side will increase accordingly. Okay, here if you look at accounts payable, so the original accounts payable here is 300. After an increase of 25%, it increased to 375. 300 multiplied by 1.25 is equal to 375. So accounts payable also increased from 300 to 375. However, take a look at notes payable. Notes payable remain constant. Here the original notes payable is 100. Even the pro forma balance sheet will also show that notes payable remain 100. Why is this so? Because notes payable is considered as a discretionary item. Okay, it's not a spontaneous item. I will explain in class what is meant by spontaneous and discretionary. All you need to remember now is notes payable remain unchanged from the original one and to the pro forma balance sheet. Okay, other items like common stock will remain constant. Here, common stock, original common stock is 800, and pro forma common stock is also 800. Okay, what about retained earnings? Okay, listen carefully. So here, the original retained earnings is 1000. Okay, the original retained earnings is 1000, but the new retained earnings or the pro forma retained earnings is 1110. Okay, where do we get this increase of 110 retained earnings? Remember just now, you turn back to page 99. Yeah, 99. Okay, you turn to page 99. From the income of 132, the company paid dividend of 44. So 132 minus 44 is 88. So this 88 dollars would be added to the original retained earning figures. Here, retained earnings in